information that I would like to pass out, especially to our parents, to help ourselves to make a better financial decision. I believe all parents here know about child tax credit. Basically, the money that government gives to every child whenever you file your taxes. Before 2020, that money has been $2,000. When President Biden took office, that $2,000 child tax credit has been increased to $3,600 for each child under age 6, and $3,000 for children under age 18. You will be getting this money in 2022 when you file your 2021 taxes. Now, this is what government is doing. In attempt to jumpstart the economy, government is advancing 50% of that money to parents on a monthly basis. So starting July 15th, parents are going to receive a monthly payment, $250 if the child is above age 6, or $300 if it's below age 6. However, if you are good, you are not in financial difficulties, things are going well, given the fact that you have gotten some stimulus money, all that, and you don't need it, everybody is automatically enrolled in the system. So June 22nd, IRS has made provision available, giving every parent the opportunity to unenroll themselves, so that when you get to 2022 and you file your 2021 taxes, you will get the lump sum. In essence, what I'm trying to say is, if you don't want to receive the monthly payment and you rather prefer to get the entire money, $3,000 if the child is over age 6, or $3,600 if the child is under age 6, you have the option to choose it. So I have made myself available. My number has been projected. If you need help to unenroll yourself, or any question that you have regarding the child tax credit, feel free, get my number, text me, call me, and I will explain it further for you.
Do you know that now is a greater time than ever to create financial wealth for your children here in America? In this season, we are receiving stimulus check, which is $1,400 for every child that we have, a tax return of $2,000, and then $3,000 next year, and so on and so on. In a few years, our kids will be of age, and they will be asking, Mom, Dad, the government gave COVID-19 stimulus money. Do you have any of my money left? And what are you going to respond? Chris Itafi is going to show us in this talk how we can use just a little of that stimulus money to create true wealth for our children.
The purpose of this slide or presentation is to show families, parents, how they can use 50% of the child's stimulus money to create wealth for their children. Then when we finish, I will show it how it does work on the life of adults as well. Now, let's first of all be aware of the money that we are getting for our children. We know that you have already gotten $500 on the first stimulus for your child. You also got $600. Then the third stimulus, $1,400 for your child. Besides the $1,400, you are also getting tax credit of $3,000 if the child is above age 6, or $3,600 if the child is between 0 to age 6. Now, we are not asking you to put all the $3,000 into investment account for the child. You are only going to use 50% of what you are going to get. Now, remember, the tax credit, the $3,000 tax credit is not only 1 year. All right, using IUL. So this IUL illustration is for a child, and the DB represents death benefit. $250,000 is the life insurance amount or the health coverage amount. Again, the focus is creating wealth. So we are not going to talk much about the life insurance, but rather the cash value, the investment. All right, now let me explain these terms. The age represents the age of the child. So here will be age 0. And the year represents the number of years the policy has been in force. Premium represents the contribution that we are doing, the annual contribution. In this case, we are assuming it to be $1,500 every year from the child stimulus money, or from the child tax credit, or the tax refund that you are getting. We are not saying that you use the $1,500 from your paycheck. No, 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 no. You are only using government money, the money that government is giving to your child, to put it, using 50% to put it into an investment account for your child. The next thing is the cash value, the investment component, and also the D represent death benefit, death benefit. All right. The reason why the cash value is green is that is our main focus. So the family decides putting in $1,500 of the government money for the child, $1,500, which is 50% of the $3,000. In 20 years, the family would have contributed $30,000. Of the $30,000 that the family would have contributed, the cash value would be $51,196 that the family will be able to withdraw.
Okay.
Now, if the family doesn't withdraw the $51,196 and something happens, such as major sickness or death, God forbid, the company will add $51,196 to the $250,000, and it will be $301,196.
So Chris, could the family use that money to pay off for college, for example?
Yes, exactly. The family can use this to pay off the child's college tuition. Let's call the child Stephanie, for the sake of simplicity. Here, Diana, you know, here in America, at 18 years, the child will be done with high school. So 19, they will be heading to college. All right, when Stephanie is going to college at age 19, Stephanie will have $46,443 in the portfolio that Stephanie can withdraw to pay off tuition. Now, Diana, let me ask you, when you were going to college, did you get $46,000 from your parents?
No, I did not. We didn't have that kind of money, but it would have been nice for sure.
Likewise, myself, you know, my family, they love me, they care about me, but they didn't have that money. Well, you and I, we do have the opportunity, not even using our own money. No, money that is coming from the government for your child.
Yeah.
And you are not using all of them. You are only using 50% of that money to put it into the account little by little, little by little. And the child's college tuition will be 100% paid off. The question that I asked myself, Diana, a few years ago was, I took student loan to pay off college. Am I going to allow my kids to also take student loan? I said, no way. You know, we can make the life better for our children by just little disciplining, using 50% of the money that you are getting from the government. Now, let's move on to see how this money will grow.
Okay.
All right, in 30 years, the family continues, or let's say that Stephanie is now of age. She continues the same contribution, $1,500 a year, which is a little less than $150 a month. And cash value in 30 years is $125,081 after she has put in $45,000.
That she would be allowed to take for herself.
Exactly. She can withdraw all this money for herself. You see, unlike 529 college fund, whereby it stops right after college, with IUL, it doesn't stop. It goes on to the person's entire life. So after Stephanie had taken the college money, the $46,000 to pay off college, she will still have opportunity to continue their contribution. In 60 years, Stephanie would have contributed $90,000 into the policy. Of the $90,000 that she has contributed, the investment will now be over $1.2 million. And if something happens, this $1.2 million will be added to the $250,000. We now have over $1.7 million that will be available for the family. Now, look at it. At age 57, Stephanie has already made over $1 million in the IUL account. What do you say, Diana?
I mean, that's amazing. Just from this investment, she'd be a millionaire by age 57. So her whole family's covered in case anything happens.
Exactly. Exactly. Now, again, let's ask ourselves, how many people in our community around age 57 have $1 million in their bank account?
I don't think I know of any. I'd say very, very few.
Not that many of us. You see, and this is the opportunity that government has created for all of us. Again and again, this is not your money. It's government money given it to the child, and you are only using 50% of that money. You don't have to put in $1,500. You can put in $500 a year or $200 a year, or you can even do it $20 a month.
So Chris, from what you're saying, there's no minimum to how much money we can put for this investment, right?
Oh, great question. So the minimum depends on your goal, what you want to achieve later in life. The minimum of all the clients that I have, the minimum that I have is $15 a month. Now think about it. When you take a child to McDonald's, how much do we spend? By the time you get up at the end of the month, if you calculate the amount of money that you spend on McDonald's, by the end of the month will be around $50 to $100. Just putting in little as $20 a month, you can begin wealth creation for the child. You know what I mean?
That's amazing. And is there ever a time when it's too late to start? Like, what's your oldest client?
Oh, great question. By God's grace, I've been blessed with the opportunity to have about 1,000 clients. And my youngest is age 0, and my oldest is age 76. So after this, I will show you on the life of an adult. So as long as you are between age 0 and 76, IUL is going to be great for you. Yes, it's all about, knowing what you want to do and sitting down with a professional to help you to structure it to build the wealth for you. Now, let me show you at the retirement age. Look at what will happen. At the retirement age of 65, it's already 1.8 million, over 1.8 million. Around 66, it's already 2 million. 2 million right there at age 66. Again, we ask ourselves, how many of our people around age 66 have $2 million in their account? And if you look at the difference between 65 and 66, is $143,603 a year that Stephanie will be able to get every single year. Now, let me ask you, Diana, if you are the one making $143,603 every single year upon your retirement, will you still be working for money?
No. Definitely not.
Yeah, so if you have heard about money working for you for the rest of your life, this is it. The child or Stephanie, who is now of age, now have money working for her for the rest of her life. You see, we are all going through the pandemic together. Our kids, they are also putting on the mask. A time will come that they will realize that, hey, during 2020, we had to put on a mask, and the government gave our parents stimulus money. Mom, where is my stimulus money? Dad, where is my stimulus money? The kids will grow up, and when they are of age, they are going to attack their parents. Where is my stimulus money? So parents will now have to answer to their children what they use their stimulus money for. The stimulus money for the child. So bear in mind, your child is going to, after a few years in the line, their child is going to come to you and ask you, where is my stimulus money? Where did you put it? I need my stimulus money. So this is it. A question that you all need to answer ourselves. If you decide to put in a little of it into a program such as an IUL, you give the child opportunity to make millions. This fulfills the scripture that talks about the fact that a good person leaves a treasure to his children's children. So the parents doing this, you are setting up generational wealth. And this is where the scripture gets fulfilled. So IUL is an investment vehicle that fulfills the scripture by creating wealth for your children and for your children's children.
Folks, in this season, we're getting our stimulus money, our tax refund, and our paycheck. What a great opportunity to jumpstart the path to financial freedom. There are many investment vehicles that can help you or your children's college tuition. Our team is available to assist you. Feel free to contact us for any questions regarding investment, college fund for children, life insurance, credit repair, or business loans and credit. Finally, if you like how we're helping our community, then please subscribe to our channel. You'll get notified with other videos of great content like this one. And also, please share this video so that your friends and family can also know how they can use their stimulus check.